of Tesla. And Tesla, one of the biggest underperformers of the session today. If we take a look under the hood at the NASDAQ 100, you're going to see that shares finished off around 6%, really 7% if you round up. And year to date, we are down nearly 30%. Now, this comes as CEO Elon Musk, he's found himself in a bit of hot water when it comes to various political endeavors. Earlier today, he said he was dead serious about starting a third political party. And even the biggest bulls on Wall Street said that this is not what investors want to hear, especially since Tesla has been struggling on some fronts, especially when it comes to its EV business. We just had the passing of the One Big Beautiful Bill that will eliminate the EV tax credits and would be a drag on Tesla's bottom line here. But I also want to call out Palantir. I mean, despite this sea of red that we've been seeing, year to date, it is up over 80%. It was actually the best performing stock in the S&P 500 for the first 6 months of the year. And then even today, we saw shares finish up around 3.5%. So Palantir, once considered a meme stock, but now very much a play in investors' portfolios there, Josh.
All right. Thank you, Allie. Adam, I want to bring you in here as well, talk about today's trade. Trump and tariffs, they were front and center. I know you say, listen, you think that's a tactic. That's part of the grand Trump negotiation strategy. Yeah. That's the base case.
Yeah, absolutely.
How do you think, though, assign probabilities to the risk that Trump says, you know what, as he starts negotiating and talking to his counterparts, he says, I'm not happy with what I'm hearing here. You're not giving me what I want.
Oh,
and those
he's already said that.
And hey, they're going up.
Yeah. Well, they're not going back to 140% or whatever the number was. I mean, remember, the TikTok deadline has been moved out 3 times. The trade deadline, I think also, curiously, has been moved out 3 times, if you include this latest one that goes to August 1st. These are negotiating tactics. We are watching the art of the deal. Josh, you and I are living members of the cast of The Apprentice finale, season whatever, and this particular finale lasts 4 years. And I think you have to recognize it in that context. This is just constant made-for-TV negotiating. We're seeing sausage get made in real time. It's a little ugly. Sometimes it's scary for the markets. But I think the market figured that out, which is why initially, while markets fell in February and March down 30% in the case of the NASDAQ, they came roaring back and we're at all-time highs. We're all realizing this is just the way sausage gets made in the Trump White House. And so, yeah, fine. We gave a little bit back today. We've been on a tear for 2 to 3 weeks straight. And today there were some trade headlines. Fine. So we're down 1%, or in some cases, if we pull it up, I think the Nasdaq's down 1%, but the S&P's down less than that, maybe 3/4 of a point. No big deal.
No big deal. Leave it there. Meanwhile, President Trump, let's stick with this. He's set to sign an executive order delaying the July deadline of tariffs to August 1st, as Adam was just pointing out. This comes after the president announced he will be imposing 25% tariffs on imports from both South Korea and Japan, beginning the process of sending letters to countries informing them of the duties that will be applied to their imports. Terry Haines, Pangaea Policy founder, joins us now for more. Terry, it is good to see you. So let's start there, Terry. You saw the headlines. They came fast and furious. Trump laying out these tariff terms, Terry, for Japan and South Korea and South Africa starting August 1st. What do you make of it?
Well, I was with, following along your discussion, I'm with you on on where this thing is and why it's there. These are negotiating tactics. What Trump is trying to do, tellingly, is not impose tariffs immediately with no warning, a la April. He's trying to give recalcitrant, what he views as recalcitrant countries, time to actually get their acts together and come in with a deal. In the perfect Trump world, put together very well by Scott Bessent and Howard Lutnick, in the perfect Trump world, there would be no tariffs, because what would happen is that the other country would always agree to lower its tariffs to the minimum possible and open its trade and get rid of its trade barriers to let more United States trade in, and thus there would be no need for tariffs. This is an imperfect world, so you're going to see these fluctuations over time, but we're moving towards a less tariffed world than we were before.
It's impressive, Terry, how much power and authority the president has here. He posts these on social media. He can move markets with it. Just a quick Civics 101 class, Terry, if you would. Where is Congress in all this?
Well, Congress is in the role. Congress has two roles here. Firstly, Congress passed the law that prior presidents signed to give the president the authority to do these things. So it's really Congress's authority. The president is exercising the authority. So, but Congress has kind of the power of the chain pulling, if you will. If Trump really got way far off of where Congress thought he should go on tariffs, Congress has the ability to kind of guide and grumble and suggest he ought to come back in a little bit more. And I would suggest that Congress, in fact, provides a lot of that subtle pressure today, right now, because what this Republican Congress wants is a continuation of trade, not a situation where trade proves to be yet one more bump in allied relationships at a particularly difficult geopolitical time.
Terry, switching gears a bit here, the big, beautiful bill, we debated it, we discussed it, we voted on it. What is next, Terry, on the legislative calendar that we as investors need to be aware of?
Well, a couple of things. It's a trope today, I think, to say that, well, the big legislating is done. This is most of his agenda. It's really not. You've got spending bills in the fall, and those are going to get fought over for months by Republicans and Democrats, not least because Democrats see the opportunity in spending bills to try to redefine themselves, and mostly how they're redefining themselves is as against cuts to anything. So that will take months. At the same time, what the Congress will be doing is trying to cut a little bit more funding. They're trying to cut some this week, about $10 billion worth of existing funding, but they'll try to cut some more, but it won't be anything significant. It certainly won't be like a Musk Doge-like levels. And thirdly, Speaker Mike Johnson in the House talks about doing some more of these reconciliation and budget bills. And we're really just past the first one, so it's a little too early to say what's going to be in the next ones. But they've got this authority to do kind of Trump plus Republican Congress bills, and they can do at maximum two more of them. So they're really looking seriously at taking up those opportunities. But that's the vast majority of that, plus deregulation, is going to take up the rest of the year, I think.
Finally, Terry, you mentioned Musk. I can't let you out of here with a question about that drama. Elon Musk saying, hey, he's going to start a new American political party. He certainly has the means, Terry. Do you think he's serious?
Well, he may be serious, but it's kind of interesting to see somebody do the market's equivalent of lighting yourself on fire in a public square. But that's kind of what he's doing. I think Musk's America Party isn't likely to amount to much for. I'll give you a 5 test, and he only meets one of them. First is money. I think he's got enough, so check on that. Secondly, the brand. I mean, he's torched his brand with both the most engaged people on the left and the most engaged people on the right. That's hard to do, but this is an unusual guy. So I think the brand is probably not in good shape. Thirdly, does he have trust? I mean, the brand's in the toilet, so I would say not any trust to move things forward. Fourthly, does he have a plan? Not so far, except to provide people more freedom and cut spending. So good luck with that, because he couldn't do it when he was actually sitting next to the president. And fifthly, are there results available? He couldn't achieve what he wanted to achieve in the few months he was in there. So why would anybody think he could do it now? Plus, existing politicians find him radioactive. So they're on both the left and the right. So I think I think this isn't going to amount to much, frankly.
Terry, always great to see you and to have you on the show. Thank you.
Thank you, Jason. Appreciate it.
Oil prices rising despite expectations for a drop on increasing supply plans from OPEC+. For more, we're bringing in Yahoo Finance senior markets reporter. That would be Inez Ferrer.
Hey, Josh, and we did see oil ticking higher today, and you would think that it would go lower because OPEC Plus decided to increase its production for the month of August by 548,000 barrels. That's more than what the street had been expecting. But this just goes to show that, in part, look, the market can absorb the supply that's coming on, the extra supply coming on. Analysts are noting that demand has been resilient, especially when we're talking about China, the world's largest oil importer. The fact of these tariff delays, whether or not eventually they'll go through or not, or what will happen with these tariffs, that uncertainty, that is not weighing on the markets right now. And Wall Street long term believes, or in the medium term believes, that oil will go lower. You've got Goldman Sachs that is keeping its forecast for $59 Brent crude in the fourth quarter of 2025 and $56 in 2026. Take a look at where Brent is right now at $69 per barrel. BNP is seeing Brent going to $55 a barrel by the end of the year, and then BNP believes that oil will recover in the second half of 2026 as supply moderates. But certainly, even though we are seeing these levels of below $70 a barrel, the street is expecting that this supply that OPEC is bringing on will weigh on the market somewhat by the end of the year. And also, Wall Street is expecting that OPEC Plus will want to raise output yet again in September.
Thank you, Inez. Well, as TikTok continues to face a potential ban in the U.S., the social media platform is developing a new version of its app. It's according to a report from The Information. And Yahoo Finance's Alexis Keenan joins us now with the very latest. Alexis.
Yeah, so the word from The Information is that there is in the works at ByteDance, at TikTok, this new U.S. version of the app. We don't know exactly why. We don't know that's to comply with U.S. requirements, but an app, a version that U.S. users could use and be free of that U.S. ban that President Biden had put in place, banning the app on U.S. soil unless ByteDance divests the app to a U.S. buyer or a buyer who is under the laws of an ally to the United States. Now, the enforcement of that law that Adam mentioned has been extended now 3 times over. The most recent deadline we have under the current executive order that keeps getting amended by President Trump is September 17th. Now, on Friday, President Trump told reporters that there was pretty much a deal in place with a group of investors to buy the app, and that he would also be talking with Chinese officials either today or tomorrow on Tuesday. Asked how likely he thinks that a deal will come to being, that it'll actually be reached, President Trump said he's not confident, but he thinks so. So far, no comment from TikTok or ByteDance, and it's still unclear who really would buy this app. There are a number of players in the mix that have happened over time. The app valued at $50 billion. You have Oracle co-founder Larry Ellison in the mix. You have Microsoft. You have Amazon as well. You have Perplexity AI, Blackstone, and also a group of investors led by former LA Dodgers owner Frank McCourt. So a number of companies, individuals expressing interest there. Certainly the White House, the administration has the power of the Supreme Court at its back here in negotiating with the company. In a ruling in January, the Supreme Court said that the U.S. Congress did in fact have the authority to enact this law on national security grounds. But a lot of questions here still coming out of this reporting. And so we're watching today and tomorrow if more will happen. We get a little bit of news on who's going to own TikTok in our future.
I think this whole TikTok witch hunt is so absurd. I mean, the fear-mongering around TikTok, oh my gosh, the Chinese know that I went to a movie theater and watched a certain movie, and then I looked at these ads, and then I commented on those posts. I mean, really? And somehow they're going to use that against me? I mean, I really just think it's absurd. We live in a world where, unfortunately, we need bad guys and enemies to blame, right? That seems to be how politics is played. And China became an obvious and easy scapegoat. And so they went after TikTok as some sort of Chinese-backed entity that was polluting our children. And well, maybe we should all just be better parents and more responsible and involved in our children's lives. I find the whole thing almost laughable. And arguably, apparently, President Trump does too, because he keeps extending the thing to sort of let it happen. You know?
Yeah, although we should remind ourselves, right, that this isn't necessarily a Trump thing. This isn't a Trump administration initiative. Right. This was a law that was passed with overwhelming bipartisan support in U.S. Congress. So there is that, and somebody thinks
and it's
this
fear-mongering.
needs to happen.
I mean, if it were really so bad, it wouldn't exist at this point. They'd already have nuked it. But clearly, it just keeps going on. I mean, I can't believe we're even having the conversation, to be honest with you.
And yet we do, and Alexis is here.
Yeah, well,
we
at least it gives us something to talk about.
That's for
Alexis,
sure.
thank you. Appreciate it. Stick around. Much more market domination overtime that's still to come. Nvidia stock has been a roller coaster ride for investors to start 2025, yet a big run over the past few months as that chip giant now up nearly 20% year to date. So what is next for Nvidia? Patrick Moorhead, Moor Insights and Strategy, founder, CEO, and chief analyst, joins me now to discuss. Patrick, great to see you, especially on set in from Texas. Let me ask you, Patrick, because we're talking chips, you got to talk to Patrick Moorhead. So here's my question. Let's begin with Nvidia.
Sure.
Big run off the April low. A name a lot of people know, a name a lot of people watching right now certainly own. What explains that move off the April low?
Yeah, so a lot of risks were taken down. You know, it was screaming for so long, and then tariffs hit, China hit, potential GDP concerns, even questions about CapEx. And nearly all of them just completely evaporated and came off the table. So the risk is lower in the perception with investors. And for the first time, this gear of the potential next wave of industrial AI, investors are starting to see the correlation and the potential upside.
You mentioned CapEx, which is an interesting point, because there were some skeptics we had on the show who were arguing, Patrick, that maybe 2025 is going to represent some sort of high mark, some sort of peak in AI CapEx, and that was bad news for the likes of Nvidia. Do you buy that?
I don't, but I do think the growth will be tempered, right? Will we see 10% growth, 20% growth? Likely. We won't be seeing 50% growth. But the only thing that could change my mind on that is I'm doing a little bit more research on the industrial edge and also enterprise AI, because as AI gets permeated into everything, into businesses, on premises, and even in the industrial edge, somebody is going to have to pay for that equipment. And if it's not going to be who you might expect, let's say the carriers, the folks who are out there investing in it today, other companies might have to come in. Let's say the hyperscalers go after that.
Trump and trade and tariffs are in focus today. Reports, the headlines were coming fast and furious. China's always in that conversation as well, of course. When you think as a chip investor, I think for China long term, is that market, Patrick, is it still as big a long-term opportunity that maybe chip investors at one point thought of it as?
The short answer is no. And the ship that has sailed already, primarily from what China is doing in the South China Sea with provocations, is they're looked at as the U.S.'s enemy number one at this point. I know there's a lot of talk about Iran and other people out there, but it really is China, and not just economically. What they're setting up against India, the Philippines, and anything in the South China Sea, even Korea and Japan are concerned. So I think it's a very cautious type of thing, and I think it's going to vacillate between full embargo on things that are viewed important to national security, or a little bit of it dribbling out. Let's say detuned Blackwells, like we saw with the H-20. I think the government has done a terrible job in fantasizing that they could actually keep China from advancing. And here we are. By pulling back on Nvidia, even on their detuned solutions, we're making Huawei the number 2 AI player out there, and it makes very little sense from our point of view.
What would be the smarter policy then, in your opinion?
The smarter policy would be to sell them detuned chips, where they're literally 10% the efficiency of Nvidia's high-end chips, to get the ecosystem locked in and get R&D flowing to an American companies like an Nvidia or an AMD or even an Intel versus going into Huawei. The second thing here is know your customer, which is, let's say I'm a cloud provider in Singapore, and absolutely, there's nothing wrong with there should be nothing wrong with providing chips to the Uber of China. Okay, we literally cut off chips to the Uber Eats of China, as opposed to military. That's how crazy it's getting.
Trump and tariffs in focus for investors. So, of course, was the big, beautiful bill. We debated and discussed that a lot.
Right.
What are the puts and takes there for tech investors?
Yeah, so the first thing is, typically government spend, if it's not property, plant, and equipment, is pretty quick. And what we're seeing is a lot of military spending. So whether you're Andurils, the IBMs, the Oracles, the Palantirs, I think we're going to see some serious action there, because a lot of people would argue that our military is outdated, and what we're seeing over in Ukraine, I think, opened up everybody's eyes to the potential threat. On the flip side, the BBB created more debt, increased the service on that debt in the future, and I kind of get back to, it's kind of a Reagan-esque play, right? Reagan ran, and he said, we're going to reduce spending. Reagan did not reduce spending. What Reagan did is, through policy, interest rates came down, almost were cut in half, and it piled on a lot of investment in the private business community for growth. So I think that's the play that the administration is running, is we may be spending a lot more and our deficit spending is going up, but we believe it's going to be growth. And I mean, time will tell. It's a lot easier to spend this money than it is to say you're going to build bridges and roads and even nuclear reactors that could take 10 years to build.
We were talking a lot about AI. Of course, if you're a chip investor, you also might have exposure to PCs, to smartphones. What do we see with those end markets?
So those are the next big investment opportunities, right? The market's been a little bit turned off because Apple has completely fumbled the ball on AI. They're a year late in terms of even what they had promised in the videos, even though we have companies like Samsung and Qualcomm delivering the capability. But I do believe when it comes to PCs and smartphones, that is going to be an upside, and the street just needs to see some, I call it a proof of life or evidence that something is happening. It didn't help that Microsoft with Windows was late with some of its features. And you have Apple as well, who's even later in terms of what they can do. But this gear will lock in, and we could see growth at that point back to that we saw with COVID, which was deep double-digit growth. And buying devices because you fundamentally can't do the type of AI that businesses and consumers want to do with old PCs, phones, and tablets.
On Apple, here's the bull case I've heard on the show, which I will now run by you. It goes something like this. The bulls will say, Patrick, okay, I'll concede they might be behind AI right now, but I'm telling you, they'll say, Apple, they're going to figure it out. They're going to figure it out. They got a lot of smart people there with a lot of money. They're going to figure it out, and they are still, so the bulls will argue, very well positioned, ultimately, as a distributor of AI to Patrick and Josh.
Yeah, so Apple has uncontested ground in most Western markets, even though Android globally has the highest percentage of market share. And they have a very good brand, and it's very sticky. The thing I like to call the inconvenience tax of moving from iOS to Android.
In other words, my entire life is on this device. It's just tough for me to move.
That's right. And even though it's possible, and even though even Samsung and Google have tools to move you off it, people in their head think it's too hard, and therefore they don't. And then you have the green bubble versus the blue bubble, which I'm surprised that regulators haven't cued into that just yet. But to answer the question flat, I think Apple has a lot of time to chip away at that very strong brand and the viewpoint that they're simple and people don't want to mess with it. Now, don't get me wrong, it's not completely smooth sailing. They're losing market share in China. They're likely going to lose market share in India, and any strong Android community in Latin America and Southeast Asia, if they wait too long, they could lose even more market share there.
All right, we shall see. Patrick, always great to see you, especially on set. Thank you, my friend.
Thanks for having me on.